Hello everybody, welcome back to my channel. Today we're going to be discussing a particular strategy that I've been back testing for quite some time, and it works on Intraday. So you can do this from the 1 hour down, so 1 hour with 30 minutes, 15 minutes, 10 minutes, 5 minutes, or even in the 1 minute. So the strategy itself is quite simple. So what I'm going to show you is the settings of this. And all it needs is 3 moving averages. So I've launched the GBP/USD chart. So I'm going to put the settings in. So put in there and just put in a moving average. First of all, I'll just get 3 moving averages and I'll show you the settings itself. Again, moving average. So once I've got the moving averages, I've got them here. So here, as you got all them, go to the settings of the first one and type in moving average 13. And where it says source, change that to high. Okay, the first one done. Now go to the second moving average. Put that one here. Again, 13. But this time the low. And the last average, okay, we're going to change that to the moving average 5. Okay. All right. So as you can see, the settings for the intraday strategy is moving average 13 high, moving average 13 low, and the moving average 5 for the close. So what I'll do is go back to here and I'll just change the style of it so it makes it easier for you to understand. So I'll choose something simple and choose the second one. Same way. And just change that last one to something a bit more significant. Good. In this particular strategy, try and make sure that the colors you use doesn't clash with your charts itself. Okay, so that where you've got your candles green, just don't make sure that you don't have anything green or black, so it just didn't clash with that. So let's get some rules on this particular strategy. So we have 2 strategies here. Okay, so the first one is for the short trade, and the second one we have is for the long trade. Okay, and once you do that, you'll see everything explained. So for the short trade, I'll put that here, type in. So the short trade is when we are selling it or when we are buying it. Okay, so we have the upper bound, the lower bound, and we've got the moving average for 5. The moving average 5, you could describe this as your trend direction indicator. Okay, so when it goes from one side to the other, it starts to change the trend. So for a short trade, what you need to see is, first of all, the candle breaching the lower band, then the moving average 5 breaching the lower band, and the entry has to be when the candle is formed below the breached candle. So what that really means is, if we look at this particular candle here, so if we look at this particular candle, it has gone from the top side, it breached the bottom of that 2 bands. Now, if we look at our second rule, it says the 5 MA breaches the lower band. So the 5 MA has also breached the lower band. And the entry point is the candle formed below the breach candle. So there's the candle that breached. This candle is lower than that, and now we enter the trade. Okay. as you can see, it is going into a sell mode, okay? And this works fantastically on all time frames, starting from the 1 hour and going down, okay? So what you can also do is to see if you can stay in the trade a bit longer, is stay as close as possible to the moving average 5. So here you have a long trade, long trade, long trade. And what you're going to see now is the first sign that the trend is about to end, or the trend is going the wrong direction, okay? So as the moving average 5 starts to go from the lower band to the top band, that will be your first indicator to get out of the trade, okay? If you do want to hold it longer, you can, but it is advised to that you get out of the trade as soon as it crosses over, okay? So short trade, price breaches lower band, there. 5 EMA crosses the lower band as well. And the entry point is the candle that's formed below the breach candle. So there's the breach candle, there's the candle form. Always try and enter after the close of this candle, so it gives you a better results. Then as you can see, it made that symbol. So if you're now trying to do a long trade, okay, the long trade, price breaches the top bar or the top band, then the 5 EMA breaches the top band, and also the entry point is after the breach candle. So as you can see, price breached. You got a confirmation candle, but you've only had a short run for that one. Okay, so now let's try it again. So price breached to the lower side. Okay, you didn't get a confirmation here. Okay, so we'll try it again. So price breaches the top band. The EMA 5 is also breached, and you've also got a confirmation candle, so you've got a bullish run there. Okay, here the EMA has crossed over, but it didn't cross over to the other side, so you could stay in that trade a bit longer. As long as it doesn't go to the other side, okay, you can stay on the trade longer. So as we see here, price breaches, EMA breaches, and you got a candle forming on top of that, so you could hold this trade for as long as it doesn't really cross over. Okay, so this is a very simple but short strategy. Okay, this works on quite a few different things. So if I now change this to the Nifty 50, okay, I've already done some markings on this just to show it to you. Okay, so here, short trade, price breaches lower band, 5 EMA breaches lower band, entry point candles formed below the breach band. So what that means is, first of all, the price breaches the upper band, EMA 5 breaches the upper band, and the entries after this. So now you can see you've got a little bit of a trade there, because afterwards it didn't go to the other side. So now let's try it again. Price breaches the upper band, EMA 5 breaches the upper band, and then you got a continuation. Okay, so now let's look at it the other way. Price breaches the lower band, EMA 5 breaches the lower band, and then you got a confirmation after this. So now you can see a long rally to the downside, and you'll see that's been very tight to the EMA 5. So the EMA 5 is used as a trend indicator. As long as you see it close to that EMA 5 and it hasn't crossed over, you can stay in this trade. Okay, let's try with a different one. So let's try with a stock. Okay, so let's try. Okay, EMA 5, so bearish candle breaches the lower band, EMA 5 also breaches the lower band, and you got a confirmation candle. You're not in a downward trend. It continued to that side, okay, so you would get out there, okay, because you're never too sure what's really going to be happening. Okay, If you are going to be using price action, just make sure that it's making lower lows, but in this particular way, you can hold the trade a bit longer. Okay, so if we look here, price breaches the upper band, EMA 5 breaches the upper band, and you got a confirmation here, and you've got to the rally to the top side. Okay, so this has been back tested on quite a few different things. If you are going to be using this strategy, make sure that you back test it yourself. Okay, it does work well in quite a few different things. It also works with Bitcoin and as well. Okay, so what you can see here, price breaches the upper band, you got a confirmation, but you really got up straight away. Okay, if you look here, price breaches the lower band, EMA 5 breaches the lower band, and you got a confirmation candle, you got quite a bit of a trade on the long side. Okay, so this works on stocks, it works on FX, it works on crypto as well. But do make sure that you backtest all this information. And if you are going to be trading this, do use minimum lot sizes so that you can stay in control of your capital. Okay, hopefully this has been educational for you. If you haven't subscribed, do subscribe. Thanks very much for today.